full NNE fractal analysis. Let's just get straight into it, okay? So starting from all the way at this bottom before all of this price action started. I'm not going to go into like the IPO day and everything. I made previous videos about that, but that's just not important right now. So this bottom was this bottom, okay? This is the fractal. This is the all the way coming up to current price action. So we push up, we do this little double top / consolidation, and then break out again. We have a very tight micro consolidation here before we pump, and we have a bigger consolidation form, which just mirrors this, which also mirrors this. It's like the same thing, and then we break out, have a micro consolidation, break out, another micro consolidation. So you can already see that these two consolidations is the equivalent of these two consolidations right here, leaving a final pump before the bigger trendline break drop happens, which was this drop being this drop. And then this is on replay mode, but this literally does a big ass consolidation just like it does over here. So this repeats right here. Now that might be a little bit confusing. I went over it really quickly, but the point is that all of these just continue to push each other out. It's like projecting. This is projecting what's going to be here next. This is like a small projection, and then it casts a large shadow. But it's the same thing as this, but it just does it on a higher time frame. So you can put this on the 5-minute and this on the hourly, and they'll look the same side by side because this is just a bigger version of this. Now, where are we right now? I'm going to give the possible scenarios of where we're at right now. It's only like 2 or 3 of them. So let's just get rid of some of this real quick. Don't really need it. So just to make it less confusing, I'm just going to get straight into the thick of it. This bottom was this bottom, okay? We push up, and I attribute this top right here. Oops. To be this top right here. Oh, I'm sorry, hold on. This is on the 4-hour. And put this on the hourly. So we push up, we do a consolidation, and I actually attribute, since this is the higher time frame one, this as just being this, and then this main top being this one. That was kind of confusing. I was on the 4-hour. I'm supposed to be on the 1-hour. This is 30-minute, and this is the 1-hour. So we do this consolidation here, which is just a 1, 2, 3, 4, 5 breakout, and it's a 1, 2, 3, 4, 5, and then notice the horizontal breakout happens after 5. So 1, 2, 3, 4, 5, boom, breakout. 1, 2, 3, 4, 5, boom, breakout. But that breakout, which closes above these wicks right here, making it a break of structure, still has this micro consolidation that happens right here, which was this price action right here. And then after we break out here, so this is this, okay? We break out and we do, remember that conversation we had on the phone, where's the June 21st consolidation where we do those 2 highs, break the trend line support right here, and then that triggers the continuation on the break of that downtrend. This pattern keeps repeating itself over and over and over again. It's unreal how many times it keeps repeating. And you're going to even spot this like on the 1-minute, it'll do it. So I'm going to highlight this, make it red so you can differentiate them. So we do boom, boom, form this trend line, and then we have boom, and then final bottom here before breaking out. And that's the same thing as this. We have boom, boom, this bottom, and then we break out. Now, right here, we can either attribute this bottom to this one, and then we break out, that's what I was attributing it to, which would then have this breakout because the lengths don't match perfectly. That's why bar patterns don't really work. You can't just stretch them on your screen. It's the price action reflecting itself and mirroring itself that matters. So we can attribute this top, this scenario has this being already topped out, And then we have a much larger pullback that comes in to retest probably like these highs again at like $16 to $15. And then we have a much larger consolidation here, which would be the consolidation before the breakout to $50. This is the scenario where we've already just topped out. So now we would technically be right here with price action. And then the drop all the way down to here would be the rest of this, which would still have us be able to make a huge profit back up to like $27 or whatever. Okay. So there's still some really good moves to trade there, but the whole $50 move wouldn't be in this scenario. Now the second scenario is the one where we are technically still here. So let's put this on the 2 hour. So this scenario has us being right here. So we push up, pull back, push up, pull back, and we attribute all of this price action to this again. But here's where it gets a little bit tricky. This, we could say, is just this price action right here, sorry, would be this. And then, so this, I gotta highlight it so you don't have to follow around the mouse, being this, okay? And then this most recent push up that we've had would be this. So this being this, okay? Because with the most recent price action of the break of this trend line, it would actually match right here of that first top, second top, and then break of trend line before heading back up. So this right here being the break of this trend line, being this break of the trend line, meaning that after we resume above this little downtrend that it made, this one right here. So after we break above that, so let's say we consolidate here for a second and then break out above it, boom. Then we know that we're repeating this portion of the fractal and we still are heading up to possibly the 30 to like, more like 32 to $34 range. So like up here. And we just head all the way up from this bottom, but we would be taking this breakout, which would give us 50% pump in a pretty short amount of time, so the options would be really good on there. Or we are literally at a top in which we are going to drop lower, bottom out, but after we bottom out, it would still be, so if we're right here and it's dropping, and our version of this price action was this would have us drop all the way down to around these previous tops that it broke out above. Notice how it never turned these tops into support. It was breaking through it, retesting these. So this would be a drop to actually test these previous highs as support rather than breaking through it. So around 17, yeah, around like $16 to $17 range would be this new support that would reflect this, and then we would look to take that micro resumption and long it back up to near the previous highs, like the order block here. So that's, if we top out, we would be looking to get in on the break above this downtrend. I know there's so much happening right here, but I'm sure you get what I'm trying to show. So this trend line that's being formed, okay? As soon as we break above that on the top scenario already being in, if we just continue going down without finding support, we're definitely at the top scenario and we're heading down. But it's just a bigger consolidation before we go to 50. And we come all the way down to $17, previous resistance zone right here. And if we hold it and then break above that downtrend, we would be entering calls and longing it back up to this zone here because it's going to be a consolidation here. So this order block right here would be longing it, and then we would be able to just trade this consolidation. So 40%. This would, we can still make profit. The whole point is that don't be like, damn it, oh, is it actually over? No, we can still make so much profit on either scenario. It literally doesn't matter. And I know you want to maximize whichever one, but just be non-biased about it. Like a 40% pump, great. And then we short, and then it comes back down to here. You get a 30% dump, and you get your puts, and you make profit off it. So it's like either scenario is totally fine. Okay, don't have a bias, because it seems like we want $50 so badly that we keep trying to only look for scenarios that point to 50. But we have to look at all the scenarios. So that's that first scenario where we actually already topped out. We'd be looking to, we would know by it not holding $20, breaking below here, and then finding support here, and then breaking above that trend line. But if we actually do bottom out tomorrow, right here, after breaking this uptrend, and we actually do find support in these previous top slash support zone, like right here, and we actually bottom out here, and then do the continuation break above this trend line, then we would know we are actually right here. And then we would just be longing this breakout to our next zone. So this would probably be 32 to 34 and then 50. And then we would put our stops. It would be a pretty big stop, so smaller position size. So it would be entering around right here, stops right below. If it bottoms out here and breaks above, we'd be entering on the breakout of the trend line, stops below, like a 10% stop, taking all the way to 32 to 34. I'd say just in the middle at 33, which is the 0.5 fib, making a 54% return. Freaking fantastic. And if it does this little consolidation right here, and we just break after coming up here, it will consolidate here for a second, you know, whether it's the bigger consolidation and the drop or the smaller one, we'll know based off of just following the price action. We'd take our profits here. If it does the consolidation and starts breaking out again on like the 5-minute time frame, we would re-enter our options, taking it up to here to our $50 price target, or 55, 56, whatever. So we would re-enter here on the break and take it up here. So those are the two scenarios. Either we bottom out here and we long the continuation break above this trend line, or we bottom out here and then long the continuation break of this trend line. Either one reaps huge profits. I would even argue that the consolidation one is better because we have back-to-back profits we can make. We can make 40% here, 30% here, heads back up. It's in replay mode, so you don't see it, but it just did basically what it did here. It did it right here. I can send you a screenshot because it's going to take a while going through right here. But we make tons of profits getting in this range, and then as soon as we actually start coming up and breaking out on the micro time frames above this range, we would know that we're repeating this, and we would just take it up to the next level again. So either one is freaking fantastic. So there's literally nothing to worry about. If you're wondering whether to hold or not, you can exit half your shares here and wait to see if this level holds. If this level doesn't hold, then exit the full 50%, but it's definitely a little bit risky to just hold all your shares hoping that this support holds. I would exit maybe half, maybe more, just in case of the probability of this happening. And then if it does end up resuming and breaks above here, just add back that 50% with the call options here, taking it back up to the next level. And then, yeah, if it just drops below here, below 1971, closes below it like on the 5-minute wherever, micro time frames, scale out of your position. It's okay. Don't worry about, oh, I took a loss, or, oh, it's at break even. I lost so much profit that I could have made. Stop. Take all of that out of your head and just play the setup like robotically, like emotionless. Comes down to here. Okay, great. It starts consolidating. You can maybe scale in like 25 to 50% shares if you want here, but I would just wait for the breakout. Enter your shares with the breakout, and then enter your options with the breakout. The stops would be below probably one of these zones, maybe DCA stop loss 1, DCA stop loss 2, and then take it up to the next zone. So those are the plays. Those are the two scenarios that are playing out. One has us top out, but we end up making a shitload of profit anyway. One has us still continuing, and we make a shit ton of profit anyway. So win-win.